Welcome. Today we're going to go over winning the game of finance, something that we see over and over, week after week. We work with real estate investors, so we hear a lot of stories, a lot of what's going on out there. We need funding, you need leverage to buy properties, you need good, fast leverage to buy them. One of the critical factors out there is your score and keeping that up. I know a lot of people don't want to go down that path, but it is a critical factor. As Wall Street, as more of these big funds take over, credit scores become more and more important. If you want to win, you got to get your score up. Here's a couple of examples we're going to go over today of what people are really doing out there and quick fixes so they can make their credit score an advantage instead of a disadvantage. As I mentioned, lower scores means you might not get a loan, or you're going to have to put more money into a deal. You're going to get higher rates or higher terms. We see it day after day, and we're helping people fix these just with simple steps. So if you're a real estate investor or even business owner and you're going to use your personal credit in and for your business, here's a few things you need to understand and understand how to quickly fix them so you can take yourself into the next level. So you're not in this cycle, this treadmill of going from using your personal credit, running it up on fix and flips or rentals, and then next time you go to refinance or get your next project, you're handicapped with higher rates or more money required in down payments and or just higher costs that they're going to give you. Now, real facts of what we're seeing out there is the number one reason that we talk to people and their credit scores are down is because of credit card usage. It's not the amount they have on their credit cards, it is the amount they use or the usage compared to the available balance. Let's just say that two people have the same amount that they owe. They both owe only $1,000, and you could take this amount and you could put this with 10,000, 100,000, whatever it is. It's just a simple example so you can understand exactly what we're talking about here. So if two people owe the same amount, $1,000, shouldn't their credit score be impacted the same way? No, because FICO and everyone else looks at this as what is the $1,000 compared to their credit limits. Let's take two people, one who has credit availability of $2,000. Their credit cards, maybe they don't like credit, maybe they don't like credit cards, or they're just starting out and they have a small balance available and they have $1,000 on that credit card. So when FICO looks at this and goes and calculates their score, what they're going to see is a 50% usage. And what I mean by that, they have $1,000 out. That's what they owe, and available is $2,000. So $1,000 is 50% of the amount that they could use. 50% is not a good number when it comes to your credit score. But let's look at someone else because we want to make sure you understand the usage. Now let's say another person who owes $1,000 has credit card limit of $5,000. May not be on just one card, maybe on a couple cards, but overall they have available credit of up to $5,000. So now when we take that $5,000 that they have available and they're only using $1,000, now they're only using 20%. Because $1,000 compared to $5,000 is 20%. So now FICO likes that person. So you have two people with the exact same amounts on their credit cards. One that FICO does not like and will actually lower their credit score. The other one FICO loves and raises their score because FICO does love to see usage. They don't want to see everything at zero either. So that 20% is a good number so FICO could actually raise their scores. Now remember, it's not the amount you owe, but it's the amount that you owe compared to your credit limits. And you want to make sure they're at least 30%, 20% is better of your available credit if you're using personal credit cards. Like we've talked about before, we advocate that you move everything over to a business card and a proper business card so it never reports on your personal credit. If you need help with that, we'd be glad to help you because our goal here is to put you in the best position so you can become successful at real estate investing. Now let's go through some real examples of people we talked to this week. Number one, we had a person called in whose usage was in the high 30s. Not that high, but it still impacted his credit score. Impacted it enough that he drops down to another tier, which means higher rates, higher points, maybe less loan to value with all the major lenders out there. His problem, he complicated it even more. He had other credit cards available. He had 0% credit cards that he stopped using because the 0% time that he had available lapsed, so he just closed those accounts. So what he did by closing them is he narrowed or decreased the available credit he had overall, driving his usage up and his credit score down. So in other words, if he would have just left those credit cards open, his usage overall, so let's just say he had $3,500 outstanding and he had $10,000 in credit card currently. But before that, he had $20,000 available. Now, instead of having a 35% usage level, he would have had half of that if he had $20,000 by just leaving them open. He was under the assumption it was hurting his credit by keeping credit cards open that he wasn't using. Just cut up the cards. Don't use them, but every month they're reporting to your credit. Every month that's helping you. Plus, it is expanding your available credit, which brings your usage numbers down. Just like the example we showed here, if someone went from $5,000 down to $2,000 by just closing a line, they just impacted their credit score because their usage went from, remember, 20% maybe up to 50%. So number one, don't close credit cards you're not using. Just cut them up so you can't use them, but let them keep reporting, because the credit bureaus look at that as extra available credit, which helps your score. Another easy credit fix, and probably even a faster one that you could use, is calling and asking your credit card companies to increase your available credit. Now, in our example where we had someone with a $2,000 credit line, if they just go to their credit card company and say, can you double? I've been paying on time, been doing everything well, can you take my $2,000 up to $4,000? By them going from $2,000 up to $4,000, now they've doubled their available credit. Now remember, in our example, they had $1,000 owed. At $2,000, which was their current available credit, that's 50%. By just calling and asking for an increase, which goes from $2,000 to $4,000, now that $1,000 only represents 25% of credit usage, which is great. So they didn't pay anything down. They didn't do anything. All they did is have the credit card companies expand their available credit. And they go from a negative, or impacting their credit score, to a positive, that's going to help their credit score. And they did all this without taking any money out of their pocket. That was an easy fix without touching any of your reserves or money in your savings. Remember, when you're looking at something like this, number two, which is increasing your limits, it's not going to report to your credit reports until your cycle in your statement. So every time your statements hit is when your credit card companies report to the different agencies. There's 3 different agencies out there, and they report on your credit card statement date. So even if you called today, increased your score, you still have to wait till it cycles, but that could be just days, or it could be up to 28 days, depending on how your credit card cycles. Number 3, easy way to fix this, and this is what I talked to this gentleman about this week, looking at going private. Going private, finding individuals in your community, in your family, friends that would love to give you some money for each project. So instead of using your credit cards, just use other people's money. Someone who has maybe 20 or 40 or 50,000. We're not talking about using millionaires' money. We're talking about ordinary people. Remember, inflation is hitting them hard too. So if they could get 8 or 9%, that's a lot better than you paying 19 to 29% on your credit cards, or even getting those loans from the fix and flip people. So that's a lot better than paying what people are paying on their credit cards. It's a win-win situation. You're helping them and they're helping you, because they're not going to get an 8 or 9% rate out there as long as you take care of them properly, secure it. Once again, if you have any questions on how to set it up, we've done this with millions and millions of dollars. Just reach out to us. We'd be glad to help. Remember, what we're talking about here is real estate is all about leverage, using other people's money, funding, whatever you want to call it. We want to make it easier, faster, and cheaper for everyone, because what happens is just a few people take these secrets and use them, and then they get all the good deals. Now, on the other hand, if you're just starting out or your credit's not so good and you need to build it, you need to look at really 2 things. Number 1 is a secured credit card, and that's a credit card where you actually have to put a balance up, but it starts reporting. And after 6 months, you could get an unsecured one, typically if you've been paying on time and using it. So if you're trying to build, start with secured credit cards, or just get authorized with a family or friend on their credit cards, because if they have good pay history and they have low balances on their credit right now, and they put you as an authorized user, that will help your credit. It's not going to help you as much as getting your own credit cards, but it will help you start building your credit. Just remember, this is personal credit cards. We always advocate getting yourself in business credit cards. If you want to learn more about that, we have other videos that you could check out. When we talk about business cards, once again, we talked about them a lot. It's not the corporate cards where it takes years and years. It's just based on your credit score and how long you've been in business. Now, to help you out, we have a free download below. It goes over some of these same tricks that we talked about. It goes over what FICO is made up of and exactly what lenders are looking for. So check us out below, and we'll see you on the next video.